Hey everyone, welcome back to Corporate Decoder, where we try to make sense of the confusing world of business and finance for you. Today we're looking at a company that might be trying to acquire a new identity, or maybe just needs a bit of extra help to keep things running. Stick around to see what Sentinel Holdings Ltd is up to. If you like getting clear, no-nonsense insights from corporate filings, make sure you are subscribed and join our Discord community, linked in the description below. So, Sentinel Holdings Ltd has filed a report called an 8K. Think of an 8K as a way for companies to announce major news that isn't part of their regular financial reporting. It is like a special bulletin. And what Sentinel Holdings announced is quite spicy. The big news here is an acquisition. On the 16th of October of last year, Sentinel Holdings bought a company called OPSEC Specialized Protections Incorporated. They didn't just buy the name, they bought all of its service contracts, its employees, and some of its intangible assets. That sounds like a pretty significant move to expand their business. Now, let's talk about the money. Sentinel Holdings paid $650,000 in cash for this business, but that is not all. There is a performance bonus attached. If OPSEC's acquired service contracts can bring in at least 80% of the income they did before the sale, Sentinel Holdings will pay an extra $150,000. What does that mean in real terms? They're saying that the business they bought was pulling in about $799,000 in revenue with about $604,000 in expenses in September of 2025, the month before the deal closed. The 80% income target would be around $639,000 in October. So they're essentially betting on the acquired business to keep performing at almost the same level after the sale. This is a smart way for the buyer to ensure they're not overpaying for a declining asset. And it gets even more interesting. The principal shareholder and CEO of the company they bought, OPSEC, will continue to work for Sentinel Holdings for at least 6 months. They'll be getting a salary of $50,000 a month. This tells us that the buyer really values the expertise and relationships the seller's leadership brings to the table. It suggests that the seller knows their business inside and out and is crucial for a smooth transition and continued success. There is also a lease agreement. Sentinel Holdings will be renting the office space from Fred Porras, who is the majority shareholder of OPSEC. This lease is for 6 months at $5,500 per month on a triple net basis. Triple net means Sentinel Holdings has to pay for property taxes, property insurance, and maintenance in addition to the rent. This ensures that the seller retains certain assets and income streams, while the buyer integrates the core business operations. It is also important to note that almost all the liabilities, meaning the debts and obligations of OPSEC, were kept by the seller and not taken on by Sentinel Holdings. This is a great move for Sentinel Holdings as it limits their risk. This filing doesn't detail a true change in control in the way you might expect, like a new CEO taking over the entire company. However, it does signify a significant shift in operations and assets for Sentinel Holdings. The acquisition is more about acquiring a specific business unit that is operational and profitable. The report mentions that full financial statements are not included but will be filed later. This isn't unusual for an 8K, especially when the focus is on announcing a major event like an acquisition. They've included the asset purchase agreement as an exhibit though. This is the legal document outlining the terms of the deal, and it will contain all the fine print about the transaction. The report is signed by Kyle Majage, the Chief Executive Officer of Sentinel Holdings. Limited, this means the company's top executive is directly involved and aware of this significant acquisition. The date of the report is the 11th of November 2025, which is a bit after the acquisition date as expected for preparing and filing such documents. Now, looking at this acquisition, Sentinel Holdings Ltd appears to be strategically expanding its operations by bringing in an established security services business. The deal structure, with its performance bonus and consulting agreement, shows a well-thought-out approach to ensure the acquired business continues to generate value. It suggests that Sentinel Holdings recognizes the importance of the acquired company's operational knowledge and customer base. One of the key strengths here is the seller's continued involvement, which mitigates the risk of losing crucial expertise right after the purchase. The buyer is also smartly limiting their risk by ensuring most liabilities stay with the seller. However, a potential risk is the reliance on the acquired service contracts maintaining their income levels. If those contracts falter, the performance bonus won't be paid, but more importantly, the core value of the acquisition could be in question. We also need to remember that this filing doesn't include the full financial picture, so the overall health of Sentinel Holdings and how this acquisition fits into their larger financial strategy remains to be fully seen until those financial statements are released. In conclusion, Sentinel Holdings is making a bold move to grow by acquisition, They're paying a reasonable price and structuring the deal to protect their investment and ensure continued success for the acquired operations. It is a smart tactical play, but the long-term success will hinge on how well OPSEC's business integrates and continues to perform. Alright, that is our quick decode of Sentinel Holdings Ltd's latest 8. Okay, what do you think about this acquisition and strategy? Let us know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. And don't forget to join our Discord community for more discussions. Thanks for watching. See you next time.